We've seen a pretty rapid recovery in a lot of solar energy stocks coming off bottoms that were hit earlier this year. Now, there's a lot of things going on here, but generally what's happened with solar energy, particularly those residential solar installers, is higher interest rates makes it much harder to finance those projects long term. If you're financing a project selling energy basically through a power purchase agreement, through some sort of lease to a customer over 20 or 30 years, interest rates go from 2% to 6%, suddenly those cash flows in out years actually become less valuable in present day dollars. That's just the way the math and the economics work. So when interest rates go up, those companies have to adjust by either lowering their upfront costs or increasing their prices. Those are both things that these companies are probably going to do, but it takes a little bit of time to go through the system. And so that's part of what we're working through. Volumes are down in 2023 and early 2024. That's hit companies like Enphase and SolarEdge. But really the first thing that we want to watch is companies like SunPower, Sunnova, and Sunrun. And those are the stocks that have done reasonably well recently. And there's some news on the tariff front that has actually been reacted to very positively by the market. But I want to at least go through exactly what we know and what to expect from those costs, because some of it is good and some of it is not so good, depending on how you're looking at it. But that's what I'm going to dig into today. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content, and thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. Let's first start by looking at a few stock charts because the moves recently have been just crazy. I'm going to start with SunPower. This is one of the stocks that moved just a tremendous amount during this little short squeeze area. This is when, you might remember Roaring Kitty from the GameStop days. He appeared to come back. We don't know exactly what the story is there, but that is one of the reasons there was this little short squeeze. Very high short interest in SunPower stocks, so that's why shares went over $4 per share, but still up 49% over the past month. Sunnova, another one that's done really well, 7.8%, so not quite as big a move, but pullback, down 72% for the year. So not a lot of momentum in the business. They've had similar financing problems to SunPower. So this is that difference between the long-term view and the short-term view. The final one is the most valuable from a market cap perspective of the three. Down 6% today, but over the past month up 17, 18%, and not quite down as much as the other two so far in 2024. So what are the things that are going on? One of the things that is happening in the past week was some clarification on what is going to go on with tariffs for imports coming from China. Solar cells have long been one of these things that is debated back and forth in the administration. Do we want to have higher tariffs that would actually make solar panels more costly for installers? It's actually not good news if we're going to have tariffs on solar cells. But if you put tariffs, you could actually potentially stimulate the US manufacturing economy. That would be good for a stock like First Solar. But to be honest, most of the manufacturing companies in the US have either gone out of business or been acquired by somebody else. So outside of First Solar, that's a bit of a fool's errand. But what we've seen here is they announced the solar tariff rate on solar cells, whether those cells are assembled into modules or not, will be increased from 25% to 50% in 2024. This was driven by structural overcapacity of solar cells in China. Now, here is the reality, is this probably isn't going to have a big impact in the industry. We've seen tariffs ebb and flow over the years. And what continues to happen is that companies just move manufacturing or move their pieces of the manufacturing supply chain around so that they can get around these tariffs. Maybe you move some of your assembly to Mexico, or you move your cell production to the Philippines. There's all kinds of things you can do to get around these tariffs. And that's exactly what a lot of these companies have done. They also have huge supply chains that span large parts of Southeast Asia. That's where a lot of these solar panels are produced. And so you just don't send the panels from China to the US. You send them somewhere else, and you send the panels from a country that isn't going to be hit by these tariffs to the US. So that's in reality what happens. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. What else is driving stocks higher? Well, let's start with SunPower again. They are making some major changes to their business, lowering their cost structure. They're going to become really more of an asset-light company, not actually doing installations themselves, but doing kind of third-party things. Ironically, this is actually what Sunrun was conceived to do as a company. They also announced that they were adding the Tesla Powerwall to the portfolio this week. So that was another one of the things that was really cheered by investors. But the general trend when you look at outlook for 2024 is that these companies are trying to get to some sort of free cash flow positive. This is really a low in the industry, not a lot of growth. You can see here that capacity installation is expected to be down for the year, even for Sunrun, who is the market share leader. So what are they doing? They're saying, hey, we're reiterating that we're going to actually generate cash from the business. And that's what they have to do. That's what they have to get to, a point where they can generate positive free cash flow. SunPower is in the same boat. And we heard similar comments from Sunnova as well. A lot of this guidance is about, hey, we are going to generate adjusted EBITDA of $350 million to $450 million for the year. So trying to get to free cash flow positive, to adjusted EBITDA positive, whatever sort of metric they're looking at, in the hopes that when the industry does get back to growth from a volume perspective, they will be much better positioned financially. So this is the area that the market is really trying to figure out. Are we bouncing at a bottom? And is there going to be a recovery later in 2024 and into 2025? I think there probably will be, but what's the magnitude and will these companies actually be profitable? That's what we don't know yet. So far, I haven't seen enough to get really bullish on the industry. I think it's very easy to argue that the valuations for all these companies is extremely low. And if we do get to some sort of sustainable point for each of them, you could just buy a basket. And I think that's often the best way to play this industry. We have seen over time that you don't necessarily know which company is going to be the winner, which product is going to be the winner if you're looking at something like module level power electronics. So just buying a basket of maybe all three of these residential solar installers or all of the module power electronics companies, that would be Enphase and SolarEdge, or all of the US manufacturers. That's really just First Solar right now is really the big name. But I do think there is going to be improvement just because there has to be. These companies can't all go bankrupt and basically shut down their businesses because the financing model doesn't work. There is demand for solar power on people's roofs. There is now an increase in demand for batteries. It's just a matter of making the economics work. And what often happens is we get a little bit too far ahead of ourselves from a financing perspective when times are good, when interest rates are low, and the economics get out of whack. And that's, I think, exactly what happened in 2023. There was actually too much growth in the industry. Now we're getting back to a more normalized level. And with stock values down, that gives a lot of potential for upside leverage. That's what I'm going to be looking for, is actual signs that that's actually taking place. I'm not interested in buying into speculation based on tariffs or based on subsidies. I want to see actual financial improvement. And I don't think we're seeing enough of that yet to get bullish on the industry, but we're getting close. So these stocks are making a comeback. Will it last? I'm hopeful, but I'm not quite putting capital to work yet. What do you think about solar stocks right now? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.